Let's take now the example of accounts receivable. At the closing date, the risk of default must be estimated. This estimation should be made client by client based on information available, but systematic estimation can be made using reliable historical data. Let's assume now that the client bad debt has owed 200,000 euros to its supplier for the last 6 months. Given the age of the receivable, a payment default of 70% can be predicted. What must be recorded in the financial statements of Distrib? You have 5 seconds to give your answer. Yes, of course, an impairment loss for doubtful clients of 140,000 euros must be recorded. As for inventories, this impairment loss is recorded as an expense in the income statement with a corresponding decrease in accounts receivable on the balance sheet. Net income has decreased by 140,000 euros, whereas there has been no impact on cash. Assume now that in December N+1, client bad debt went bankrupt. The legal administrator pays 20,000 euros to Distrib to settle the account. How does this impact the financial statements of N+1? You have 5 seconds. Do you think that an additional loss of 40,000 euros should be accounted for? You may be right. Let's check. In fact, Distrib has lost 180,000 euros, which is the initial value of the receivable minus the 20,000 euros payment. Out of this 180,000 euros, 140,000 euros had already been accounted for, and the remaining loss to be recorded is 40,000 euros. In the first place, the cash payment is recorded. Then, a loss of 40,000 euros, named bad debt write-offs, is recorded with a corresponding reduction in accounts receivable, whose balance is now 0. The N+1 net income decreased by 40,000 euros, whereas the overall cumulative impact on net income over N and N+1 is minus 180,000 euros. Let's take now the same example, but assume that in July N+1, client bad debt paid everything owed to Distrib. How does this impact the financial statements of N+1? You have 5 seconds to give your answer. Do you think that the N+1 income will increase by 140,000 euros as the default risk does not exist anymore? Congratulations! This is perfectly right. Cash increases by 200,000 euros on the balance sheet, while the receivable disappears. The N+1 income increases by 140,000 euros. A reversal of impairment is recognized in the income statement as a revenue. The overall cumulative impact on net income over N and N+1 is nil, which is absolutely normal as Distrib has not lost anything. Cash is impacted by plus 200,000 euros. This example shows that impairments and write-downs can be reversed, unlike depreciations and amortizations.